Good evening from Hong Kong and welcome to our October 2025 AFC webinar. My name is Thomas Hooker and I'm the CEO and founder of Asia Frontier Capital. With me today are Ruchir Desai in Hong Kong, who's managing with me the AFC Asia Frontier strategies. Ahmed Tabaqchali, the Chief Strategy of the AFC Iraq strategy, is today in Baghdad, Iraq. Scott Osheroff, the Chief Investment Officer of the AFC Uzbekistan strategy, is in Tashkent, Uzbekistan, and Vicente Nguyen, the Chief Investment Officer of the AFC Vietnam strategy, joins us from Ho Chi Minh City, Vietnam. This webinar will last about 45 minutes, and thereafter you will have the opportunity to ask questions during our 30 minutes Q&A session after the presentations, which might maybe today last a little bit longer. You can submit your questions online through the Q&A icon at the bottom of the Zoom window on your laptop, PC, or mobile phone. And please note, this webinar is an overview of our investment strategies and investment universe and should not be taken as an investment advice. The third quarter 2025 was again a good quarter for our various strategies. For example, the AFC Asia Frontier strategy was up 10.4% in the third quarter alone. And we had exciting news from Vietnam, which was upgraded by FTSE Russell from a frontier market status in their index to a new emerging market status in their index, among other interesting developments, but my colleagues will brief you now in the next 45 minutes about those. Ruchir, over to you for the outlook for the Asian frontier markets and the AFC Asia Frontier strategy.
Great. Thank you, everyone, and welcome to our regular quarterly webinar. So I'll just get started. So as Thomas mentioned, it was a pretty strong quarter for, in general, Asian frontier markets and, of course, our AFC Asia Frontier strategy. The year started off on a bit of a soft note, given the uncertainty over geopolitics, the tariffs, etc. But we've seen extremely strong performance from our markets and also the strategy since basically May 2025. So last 5 or 6 months have been very strong across the board. That's reflected over here in this chart, as you can see. Asian frontier markets amongst the best performing, possibly globally, in fact, globally, and also especially in Asia, in this part of the world. Markets like Sri Lanka, Pakistan, Vietnam, Kazakhstan, Oman, a very strong performance, given the fact that they've all pretty much in negative territory until the end of April 2025. So like I was saying, the last 5 or 6 months have been very strong. Both Sri Lanka and Pakistan have been done very well, up almost 40% so far this year in dollar terms, year to date. Vietnam's been a strong comeback, up over 28%. Kazakhstan's up about 24%, and Oman is up about 23%. So very strong performance, and also on a relative basis, very strong outperformance against the region. And this is not just the first year of strong performance. Even 2023 and 2024 was extremely strong for the AFC Asia Frontier strategy and also for Asian frontier markets. So this is the third year in a row that we've seen very strong performance, and I can discuss some of the reasons for that going forward as well. So in a nutshell, very strong performance and broad base. It's again third year in a row where the strategy's returns have been broad based. It's not just one country or two countries or a few stocks. Leading returns has been pretty broad based across markets for a third year in a row, which again reflects the fact that our markets are making a very strong comeback, driven by fundamentals, stable macro, stable politics, and recovering earnings and economic growth. So moving to the next slide. And this just following on from my discussion about performance, our AFC Asia Frontier strategy has shown very strong returns on a relative basis over the last 5 years, despite all the issues the global economy has faced. In the last 5 years, you've had the pandemic, the war in Ukraine, conflict in the Middle East, a very aggressive Fed until in 2022 and 2023, and also macro issues in our own countries. But broadly, the companies and the countries that we invested have been quite resilient, and they made a strong comeback, and that's reflected in the returns. Of course, it also comes down to good stock selection and good country allocation, since we follow both the top-down and bottom-up approach, and that's also been helpful in terms of generating performance for our investors. So again, discussing the fact that performance has been broad-based and very strong, not just this year, but over the last 5 years as well. As this chart shows, you outperformed all the major emerging and frontier market benchmarks. On the next slide. So I'll just spend a bit of time on some of the calls or some of the calls we took at the end of 2024. So at the end of 2024, we mentioned in our Outlook report that we expect Pakistan and Sri Lanka to lead returns in 2025, and that's pretty much played out. Sri Lanka is the best among the best performing markets for us this year and also in the region. So it's up 38% in dollar terms, as I mentioned. But despite that, I think this still, in general, Sri Lanka is still one of my top country picks. It's a structural growth story from here. They've had a very tough time between 2018 to 2023, but since last year they've been made a strong economic comeback. Macro is stable, inflation's come down, interest rates have come down. Tourism has made an extremely strong comeback, which I'll talk about. But more importantly, after a very long time, I would say probably after 5 or 6 years, in fact, even more, that the country has both economic stability and political stability. And that's why you've seen returns still continue to be strong even this year, despite the fact that the market is up 45% in dollar terms in 2023 and 2024. So the market has investors have a lot more confidence on the outlook for Sri Lanka. It's more sustainable. And that's why, though, another point I'd like to make is that at the end of last year, we also mentioned the returns will be driven not just by earnings growth, but also by the P multiples or valuations re-rating in our markets. And that's happened in Sri Lanka as well, and some of our stocks. But still, relative to history, the market is still a bit of a discount, as the chart shows you. Pre-crisis, the market used to trade about 14 or 15 times. And even on a bottom-up basis, many of the companies we own are still trading well below the historical peak multiples. For example, the banks, which now have kind of earnings which are back to pre-crisis levels, return on equity which are back to pre-crisis levels of 17 to 18%, but still traded price to book ratios of 1.2, 1.3 times. So still room for multiples to expand, backed by strong earnings growth. So Sri Lanka, I think, is a story to watch out for, which in my view still is a top country pick for me for the next 3 to 4 years because of the points that I just mentioned. And just following on to the next slide, just a bit more Sri Lanka, because it's on my top picks. So as I was mentioning, economic growth has been very strong in Sri Lanka. GDP growth has consistently been well above expectations for the last 6 quarters now. In the second quarter of this year, GDP growth was almost 5%. IMF and World Bank have been estimating GDP growth of 2 to 3% for the last 2 years, but Sri Lanka has beaten all these expectations. And even as I mentioned, tourism has made a very strong comeback. So Sri Lanka is on track to achieve its all-time high tourist arrivals for about 2.5 million tourists this year, which is good, but it's still well below what they can do. And I think the catalysts are in place for this, because I think Indian outbound tourism is a growing market, and Sri Lanka is very close to many major Indian cities and just a few hours of flight time. And you're seeing a lot of Indian tourists go to Sri Lanka now. India is about 20% of tourist arrivals to Sri Lanka, and even in Colombo, you're seeing new leisure developments come up. So Melco of Macau just in the JV with the local company which we own in the fund, which we own the strategy, set up the first largest casino in South Asia just a couple of months ago, which I plan to visit in December. And that could drive a lot of our tourist arrivals to Sri Lanka as well, which could be, in my view, a game changer for the country. So overall, Sri Lanka is is on the right track. Well-run companies, attractive valuations, stable government, stable economy. So I think I'm quite bullish that even though the market's done well for the last 3 years, I think you're going to see a sustained bull market in Sri Lanka for the next couple of years, given the positive aspects of the economy and the politics. The next market I'll talk about is Pakistan. That's a country which also we were positive on, despite, again, very strong returns. Next slide, please, Peter. Pakistan also performed very nicely, especially last year. It was up 87% in dollar terms, but this year up about 36% in dollar terms. So again, very consistent and strong performance from the Pakistani stock market. Again, as you can see on this chart, the stock market returns have been driven both by earnings recovery and also the P multiple expanding. You can argue that P multiple expanded quite nicely now the last few years, but it's still, relative to history, still lower than where it was in 2016, 2017. Again, on a bottom-up basis, many of the companies, especially in the cyclical sectors like cement or consumer discretionary or automobiles, the PE multiples are still well below where they were at the previous peak. And again, Pakistan's only making an economic recovery. Well, this is the first year of the proper economic recovery for Pakistan post the IMF program, post the macro crisis, political crisis. So Again, the base is very low, like Sri Lanka or Pakistan. So I expect Pakistan to have a good 2026 and possibly 2027. But in general, the feeling I get is that they seem to want to have macro stability. And if that takes place in the next couple of years, I think Pakistan is set for a multi-year bull market. And I'm quite confident that could happen because from what we see on the ground, from policy making, from policymakers as well, from their comments, so far execution has been focused on that to maintain stability on a macro and political basis. So I won't be surprised if we see a bull market playing out in Pakistan over the next couple of years, despite the strong returns over the last 2 years. And again, valuations on a bottom-up basis are very, very attractive. Next slide, please. Yeah, and the other theme we discussed at the beginning of the year was the Central Asian stocks that the strategy owns, especially in Georgia and Kazakhstan, could re-rate, and we've seen that play out. One is obviously because their economies are quite stable, doing quite well. GDP growth in Georgia is about 7% so far this year. Kazakhstan is growing at about 5% in terms of GDP growth. So earnings have been very, very, very strong across the companies we own in these two markets. But besides that, since the year began, there have been potentially geopolitical tailwinds in the region because of the Russia-Ukraine conflict. I don't have a view on where it's going to go, but that's one reason also why you've seen sentiment towards these stocks improve. So you've seen price to book ratios for these banks expand because of possibly a lower geopolitical risk premium for the region. And that's why you've seen some of the banks we own, especially in Georgia and Kazakhstan, see their multiples re-rate. For example, TBC Bank and Bank of Georgia, both trading at 1.1 price to book ratio at the start of the year. Now they're about 1.5, 1.6 price to book. Same for Halik Bank, which are less than 1 times price to book, and now I think it's 1.2, 1.3 times price to book. But also earnings have helped a lot. So very strong fundamentals backed by potentially geopolitical tailwinds. So that's played out as well. Next, I'll talk about Bangladesh, which has been a dark horse for me. So it's re-rated a bit since in July, August, and now it's corrected again in the last probably 4 to 5 weeks, given the political noise and the potential upcoming elections. Parliamentary election is February 2026. But broadly, the case is set for Bangladesh to re-rate. I mean, I won't be surprised if you see a pretty strong re-rating in Bangladesh over the next 12 to 18 months. Valuations, as the chart shows you, the blue line is the P ratio, pretty much decade low. Market's gone nowhere for the last 4 or 5 years. Fundamentals bottom up very strong. In fact, just for the September quarter, you've seen many companies declare results. The banks are showing extremely strong results. Some of the pharmaceutical and consumer companies also showing strong results. You're seeing some economic momentum come back, given the stability in the country over the last 46 or 9 months. And macro has obviously turned the corners. You've seen the country now has a current account surplus. Inflation has leveled off, possibly will start coming off. In the next couple of months, you could see potentially interest rate cuts by the central bank, and if not the fourth quarter of 2025, then the first quarter of 2026. So the overall macro has turned. I think what will really be a positive catalyst is the successful parliamentary elections, which will be held in February 2026. That will really drive both business sentiment and consumer sentiment in general, and also investor sentiment. We saw the same thing play out in both Pakistan and Sri Lanka last year, post-elections. The macro had stabilized, but the market really took off after elections once there was a stable government in place. So a lot more confidence came into the market. So I expect the same thing to play out in Bangladesh. And therefore, we've increased the weight to Bangladesh in the strategy. So Bangladesh is now third biggest country allocation. Number 1 is Pakistan, number 2 Sri Lanka, and number 3 is Bangladesh. And also, just to add to that, Central Asia, I spoke about Central Asia, so Kazakhstan and Uzbekistan also on the top 5, I would say top 6 country allocations for us. And the next slide, I just talk about, I was mentioning quite bullish on Bangladesh going forward, and that's why it's our third biggest country allocation now. And then I just move on to a bit of the outlook. So yeah, I mean, 2023, 24, and 25 have been quite strong for our markets. But despite that, so now as this chart shows you, The NAV for the fund is at all-time high. We were all-time high at the end of 2024, and every month we have reached all-time highs pretty much every month so far this year. But that doesn't make me feel a bit complacent about the outlook, because we've been on the ground pretty much all our markets this year, and we see a lot more optimism amongst the consumers, amongst the businesses, and that's reflected in the numbers. So earnings growth has been very strong. So in my view, I think Asian frontier markets, in my view, I think are in a very sweet spot now. Many of our countries that we invest in, Bangladesh, Pakistan, Sri Lanka, even Vietnam for that matter, had a tough time economically one way or another in the last, in the last 4 or 5 years. And also Central Asia, right? Post the war in Ukraine, they had a bit of a tough time initially. But now you're seeing many of the clouds clear. You're seeing macroeconomic stability come back. You're seeing political stability come back. Valuations are not too stretched. Earnings are coming back. So overall, broadly speaking, I think pretty much all our markets are on a sweet spot. So I won't be surprised if you see a rally across the board in our markets, which we've seen so far in the last 6 months. It's not just been about Pakistan or Sri Lanka. We've seen even Uzbekistan, which Scott talked about, is rallying now. Iraq has done well. Vietnam has staged a very strong rally in the last 6 months. So overall, I'm quite positive, and there's room for multiples to continue expanding and earnings to still be strong, which will drive earnings and which will drive returns and drive stock market sentiment in our markets. So pretty positive outlook, even though in October, as I mentioned, I'm still confident on the 2026 and even 27 outlook going forward. And just like I mentioned, we've on the road quite often this year in many of our countries, which is a very important part of our investment strategy, and that's how we've got a good grip on where sentiment is in our markets compared to where it was probably 2 years ago. Even in Vietnam's case, at the beginning of the year, which was sentiment was quite soft in the country when I was there in February early this year. So far this year, we've been to Bangladesh, Vietnam, Uzbekistan, Iraq, Sri Lanka. And just to talk about Oman, that's a new country we've begun to invest in. Thomas was there just last month in Oman, and that's a bit of an interesting story in terms of reform. I mean, everyone's spoken about reforms in Saudi Arabia in the last few years. Yes, that's a big market, but Oman has been a bit of an ignored market in terms of reform. So number one, valuation is very attractive. You have single-digit P multiples for well-run large companies. Dividend yields for the whole market is about 7%. But the country's done well from a macro perspective as well. The debt to GDP has halved in the last 3 or 4 years. I think two sovereign agencies upgraded Oman's sovereign credit rating in a very short span of time in the last few months. So a lot more optimism on the ground in Oman as well. So the government is doing reforms. They're IPOing some of the state-owned companies. So we see quite a bit of value in Oman as well. So we've bought the strategy has bought 3 positions in Oman. And I think the outlook for the country also is quite positive. That's a country to watch out for in the Middle Eastern region in terms of reform and growth. Then I'll be in Sri Lanka again end of this year. So it's just a bit of a snapshot of some of the pictures where we have. I also visited, as the picture on the left shows you, I was in Kazakhstan last month. I visited the strategy owns the largest uranium producer globally, which is listed on the London Stock Exchange, but operates in Kazakhstan. And we went to see 2 of their uranium operations or uranium mining sites last month in Kazakhstan. Was also in Almaty and Metallic Bank, which is the largest bank in Kazakhstan and also the second biggest stock position for the strategy. And then also I was in Vietnam last month, and I was at the FPT headquarters, which is the largest technology company in Vietnam and our largest position in Vietnam. So this is just to give you a feel that it's not about sitting on Bloomberg and just reading research reports. We also go on the ground. That's one key reason why the performance has been so strong over the last few years. I just want to wrap up by saying, like I said, I believe Asian frontier markets are in a sweet spot. The expected performance to pick up in the second half of 2025 post all the tariff noise and geopolitical noise, and that's happened. Performance has been very strong through the summer, and especially the last 5 months. I don't change my country views at all. I think Sri Lanka continues to be my top country pick with a 3 to 5 year view. Bangladesh, I think, can see a pretty big re-rating next year. I think Pakistan is in the midst of a multi-year bull market. I won't be surprised if that happens, because I think they want to get their macro in order and want to make the country relatively more stable. Of course, it's a very relative word, but compared to what it was, a bit more stable. And I think Central Asia is going to be stable, bottom up. Kazakh and Georgian banks should do well. But Scott talked about Uzbekistan, and that's something which could see a pretty strong turnaround. In terms of stock market returns, the economy is doing fine, but stock market, I think, should do much better going forward. And I think Vietnam, which was kind of underperforming in terms of stock market performance for the last few years, I think is standing out again. They've overcome the initial hurdles of the tariff uncertainty and the trade issues. But economic growth on the ground is very strong. As I said, being on the ground is important. There's a lot more optimism on the ground among corporates, and it feels that the government really wants to reform the economy and basically get it going compared to the last few years. And as I mentioned, Oman is a key reform story in the Middle East, and as Ahmed will tell you, the transformation in Iraq continues. So overall, though last years have been very strong in terms of performance for the AFC Asia Frontier strategy, I'm quite positive going into 2026, and I wouldn't be surprised if we see a multi-year rally in Asian frontier markets, given that many of these countries have now come out of the issues that they faced the last few years. Plus, on a global macro basis, you're seeing more tailwinds in terms of a bit of, I guess, a bit of more dovish Fed. But even if I don't know how many times the Fed is going to cut interest rates, but even if it doesn't happen, these economies now in our universe have their own momentum now. So they're in a very, as I said, they're in a very sweet spot. So I think the Asia Fund Fund strategy is something to investors should look to watch out for in terms of returns for the next few years. So with that, I'll hand over to Ahmed Tabaqchali, who is the chief strategist for our AFC Iraq strategy. Over to you, Ahmed. Thanks.
Thank you, Ruchir, and thank you everyone for taking part in our regular webinar. Now, if I have the next slide, Peter, please. Right, as Ruchir argued that the Asia frontier markets, as well as the strategies of the AFC group, has all had a phenomenal sort of number of years. The Iraq strategy, as many of you would know, has had a very strong performance over the last couple of years. 23 and 24 were outstanding for the strategy, as well as the broader market. This year is more of a subdued return, and more, the way I would look at it, more of the correction. Some would argue that a 12.8% performance on top of all of such gains for the strategy and for the market is in fact a continuation of a run. The reason why I argue it's a correction is that it's the correction, 12% is the correction, is the fact that the way to look at Iraq, and the way I would look at Iraq, is not so much is Iraq is a combination of two strategies. One is a cyclical strategy, and the other superimposed on a secular strategy, and that reflects the nature of the country itself. Basically, the cyclical strategy is, as most people are aware, and it's actually quite linked to Iraq, happens to be the link to oil prices. Most people look at Iraq like they look at many markets that are driven by oil as a reflection of oil prices. So they would argue that the returns for 23, 24 were linked to higher oil prices, while the mediocre return for this year are linked to more of the declining oil prices. While that is correct, and there's nothing wrong with that argument, however, something like that misses what is the Iraq story and how Iraq is transforming. Keep in mind, as many of you might be aware, Iraq is a country that had almost over 4 decades of conflict, that are, I would argue, probably one of the longest conflicts in the world. Can I have, I think, Peter, next chart, please. Next one as well, please. Is that, no, prior one, please. Right. The idea why I say it's a long-term story and transformation is the fact, as I mentioned, 4 decades of conflict plus, in which the infrastructure was collapsing. Also, Iraq is a very young country, driven by a population pyramid that is very heavily skewed towards the youth, which means we have the youth as they grow, transforming the economy, on top of catching up with the rest of the world. One of the biggest things that's happening place is the fact the banking transformation that I've been arguing about for the last few years. Actually, in fact, that is so attractive that many regional banks are coming into Iraq, as we will discuss over the next few years, next few months in our newsletters. Now, so going back to Iraq, is that the economy currently, part of the transformation is undergoing. 2 major are driving it. One, as I mentioned, the banking transformation, and the other one is the cumulative effect of the relative stability the country has enjoyed. Now, that reflects in the massive spending on infrastructure and what have you, but also the perception of the country, and that's what we would like to show you. If I have next slide, please. So this year, as we've mentioned in the last webinar, and we've been sort of telling the story over the last 4 months, is the fact that Thomas, my partner, as you know, visited Iraq at the end of May as part of the strategy's 10-year anniversary, and we embarked on a tour of Iraq. The important thing about that is the fact that, you know, as Thomas will argue, is that we'll tell you later, is that almost every travel advice on Iraq is avoid, 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 or various reasons. Also, every other report that you probably read on Iraq shows you the country is in turmoil or something like that. What we did is that what we're trying to do is trying to show you, one, how normal the country is. Second, the attraction that the country offers in terms of history, in terms of culture and so forth, as well as the investment thing. So in the last webinar, we discussed the travel that we had over the old parts of Baghdad. Sorry, forgive me, I'm losing track of time. The visit of the Iraq Stock Exchange, the Bank of Baghdad, and Baghdad Soft Drinks. Over the next few slides, I would like to show you some pictures and some comments we've seen part of the ancient Iraq as well as some of the attractive parts of Iraq. Next slide, Peter, please. Right. So in the current slide we show you is that we took a visit after visiting the stock exchange and so forth. The next few days we went to see the older parts of Baghdad, and we traveled along Baghdad. And you can see on the left-hand side is the what's called the Madrasa Samsuriya, which is one of the oldest universities in the world. The thing which is quite attractive about Iraq, and also where we need to invest a lot in, is that the country is not geared for tourism. One, we don't have many tourists, I mentioned, but also our system is gradually adopting to the demand of tourism. So most of these places, most of the historic places we've seen, either don't have much information that helps monetize these resources, or they open in hours that are not attractive to tourists. So if I may stop here and invite Thomas, or Abu Dhabi as we call him, to make some comments on the visit here. Thomas?
Yeah, Abu Dhabi, yeah, thank you, Mon. Yeah, as you can see on the left-hand side, and I think on the next page as well, when we went to Babylon, hardly any people, and that is a little bit sad when you see all this kind of tourist attraction, as you can see here on Babylon. So first of all, very few people. Second thing, what you don't see, it's bloody hot. You can't see it. And you can't believe it when you have not experienced it. And the third thing is, especially also here in Babylon and later in Ur or Septicon, is that still a lot of the especially in Babylon, a lot of the old city. I mean, it was a big city, something like Angkor Wat, is still under the ground, is not yet discovered. So we don't really know how big it is, but there's something there. And I really hope that the government of Iraq, with the help of maybe multinational organizations like the UNESCO or something, or some other countries. I think I've seen some Italian people and English and French people or students or archaeologists working there on the ground and really discovering more. I think there will be more, and that will be very exciting and could be huge potential for Iraq.
Thank you very much, Thomas. I think the interesting thing that Thomas mentioned here, one is obviously the intense heat. I mean, you have no idea how hot it is right now. Today, we are in almost at the November, and Baghdad is enjoying a wonderfully a cool 35 degrees during the day. So it gives you an idea. But anyway, we went in during the summer months, and that's where the heat is intense. Now, the thing is quite important, as Thomas mentioned, is that, yes, Iraq has, many of the attractions that we've seen. So, for example, not only is the country is ancient, actually it's very ancient, but also the number of attractions that are still hidden, mostly as a result, in a way, of the isolation that the country had over the last 4 decades plus. So imagine from the 80s onwards, we've been completely isolated, and it means there have been hardly any visitors and hardly any excavations, as well as, for example, that's what I think is attractive about the country. One is our oil resources. Really, we are still, pumping oil from the same fields that were discovered in the 60s and 70s, and yet potentially Iraq sits on a massive more amounts of oil, also gas and other things. And I think this is really where the attractive part of the Iraq investment story comes in, and where the long-term part of it is that it has more than one leg. So tourism, obviously that's a long-term story, but the country has almost everything one can think of. Babylon, not only is history, but for instance, almost every other history is linked with Babylon. On the left, Babylon is where Alexander the Great died after, conquering the world. If I can have next slide, Peter, please. So, we went to Ur, and Ur, this place on the left-hand side is the Ur Zekaret. What we've seen is, part of what is there, the rest is being navigated and looked after more and more and more. But it just shows you the potential if the country stabilizes more and tourists do come in the amounts that actually reflect the country's history, then you could see a huge investments in hotels and what have you that is already taking place across Iraq. We went to Basra and we went to one of the brand new small hotels. There's all over the place taking place. So that with the roads and what have you, and investments and tourism, you can see there is another leg to this investment story. And if I can have the last slide, or one more slide and one more after that, because I'm conscious of time. So one of the, after visiting Ur, we went into the marshes. And I think that's another part of the attraction that the country has offered. The marshes, as most of you might have seen or read in various news, that they're shrinking, that they're drying up. And it's true. They are a fraction of what they were. Nevertheless, they are still massive and they're still a water world. I mean, we went in and we spent an hour after sort of, sitting in the Madif and having fish. So for Thomas was the second fish of the trip instead of kebab, but also we spent like an hour to an hour and a half in the marsh in the boat, not realizing, how long we spent. And yet, it's still there. So actually, literally a water world in the middle of the desert. And the last slide, please. Sorry, two more slides, I apologize, is that we visited Basra and, sorry, Peter, can I have just quickly the prior slide? I won't take too long. We visited Basra, and Basra shows you that the investment boom or the restructuring boom that Baghdad is witnessing is across the country. Basra is the country's third largest city. It has seen the most devastation during the Iran-Iraq war, where it was surrounded for a while by the Iranian forces, and it's seen the worst of the sectarian conflict. Yet, when you look at it, we took a picture from the top of the rooftop at the hotel, and you can see it's a city that's seeing investment. We went to a coffee shop, and the reason why I highlight one picture in the coffee shop is that you can see the coffee shop is part of a global chain, and this is really what you're seeing in Iraq as well. Many global chains are coming up, opening up branches in Iraq because there's a huge demand for them. And the last slide, please. So with the last slide is that Thomas ended the visit to Baghdad, to Iraq, with a visit to a business school that I took part in founding, as well as in teaching there. And the interesting thing about this, and where I want to end it with, is that the youth, there's a huge demand for education, for more education in Iraq, because the companies that are coming into Iraq they all need more and more Iraqi professionals who are experienced with English and other aspects of outside culture to hire young guys. I mean, the school, not advertising for the school, but it has something like 98% hiring. And that is a reflection of the fact all the companies coming in, hiring Iraqis, being a huge demand. In fact, any trip to Iraq from Jordan or Turkey or the UAE or Qatar, well, direct flights, the flights are almost full on a daily basis. And that just shows you what I'm trying to say. Relative stability is inviting companies that's coming in, investing in people and infrastructure, as well as the transformation that we talked about. With that, I thank you all for your time and passed on to my colleague who looks after our Uzbekistan investment strategy. Scott, over to you. And thank you all.
Thanks, Ahmed. Good day, everyone. So as we've talked about for many years, the focus on Uzbekistan, the focus of our strategy has been, well, firstly, you have a nascent stock market. To get it going, you need to probably have state-owned enterprises list. those will drag in local and foreign capital. Ideally, they dual list. Then what you start to see is local investors, again, get into the market. You have more depth, more liquidity. You see the corporate bond market develop, and then ultimately see private sector companies come to the market, because right now, if anyone wants to raise $2 to $5 to $10 million, good luck. There's a reason in this country why private equity multiples are higher than public market multiples, because the market effectively doesn't work. Nonetheless, you have really interesting, fast-growing companies on the market. So therefore, our strategy has always been to concentrate our investments in the de facto blue chips of the market, which are the fastest growing and best leveraged to economic growth, where when competition comes into the market and says, what do we want to look at? What do we want to buy? The opportunity set is very narrow, and their buying should add marginal pressure to the re-rating of the market, but we should be along for the ride. And that's already beginning to happen with our strategy up 5.8% for the month. So it's a nice turnaround from the past few years. Next slide, please. I guess 2 more slides. So this is a view just out of sight of Tashkent region near a hydroelectric dam that I was on, that I visited. Next slide, please. On a tour with Franklin Templeton. Because for those of you that have been following for a long time, the challenge of this country has been, they've announced privatization programs in the past. This is the 3rd one, where they plan to IPO dual list, actually, roughly 14 companies. The companies have not been ready. The government is doing so much so quickly that effectively they announce a privatization program, we get excited, and then it falls into the ether, and no one ever talks about it again. This time, however, perhaps 3rd time's a charm, feels very different, because the light is being shown on Uzbekistan, and to be blunt, if they muck it up, they're going to have a big issue. Also, the first vehicle that's going to be privatized and dual listed is what I've mentioned over the past few months in our newsletter, which is the Uzbekistan National Investment Fund. This is basically a special purpose vehicle with the government's stake, or part of the government's stake, in 18 state-owned enterprises. Franklin Templeton is managing the vehicle. They did something identical in Romania, except here the government is actually very much in favor of it, and there are presidential decrees around this vehicle and aspects that will support it. So last week, Franklin Templeton, along with the government, held a conference in Tashkent, which by my estimate is that there were $50 billion of private capital in the room. Then I spoke with some people at Franklin Templeton and was told it was more like 500 billion. And that excludes the fact that Franklin Templeton is a $1 trillion asset manager. So this is probably the single largest event in Uzbekistan's history in terms of attracting private capital to the country. So last week was a phenomenal event. And of course, everyone can see what's going on in the country. For those of you that have been here, are there challenges? 100%. But the fact that Franklin Templeton is managing this vehicle with a plan to dual list it in London and in Tashkent sometime in the first quarter means that things are beginning to pick up steam. The plan is to IPO roughly 30% of it, which right now its NAV is roughly 2 billion. So you'd be looking at about $600 million through the IPO, of which I imagine it will be oversubscribed, similar to the country's Eurobonds, which is 3 to 4.5 times. Based on the amount of capital that was in the room, that doesn't seem impossible. So let's take a step back, because Uzbekistan is very much a country of 2 steps forward, in some case 1 step or 2 steps back. And there's a big privatization program underway with roughly 14 SOEs that are going to be individually IPO'd. 7 of them, if I'm not mistaken, are in the Uzbekistan National Investment Company. Others will be IPO'd separately. So the government has a plan to IPO Uznef in the first quarter with Franklin Templeton, and thereafter in the second half is supposed to be Uzbekistan Airways, the national air carrier. 25% of Uzbek Airways is in Uznef. The balance is owned by the government. So in speaking with Franklin Templeton in regards to timelines, we've asked, what if the government isn't ready to do the IPO, et cetera, or they try to backtrack? Franklin Templeton has said there's a presidential decree around the fact that they have, for example, 25% of Uzbek Airways. If the government doesn't want to IPO 25% of their stake, Franklin Templeton has management autonomy to carve out or spin off the 25% in Uznif and IPO it separately. So potentially some of these IPOs really get going, and we see some big momentum in the market. But again, when you look at the timeline for these companies, the National Gold Company, the National Uranium Company, it's all very exciting. Being on the ground, I know the situation with a lot of these companies, and some of them simply aren't ready. So taking a more pragmatic approach, rather than saying all these companies are going to be listed, what needs to happen first? A few years ago, the government, along with private sector, drafted comprehensive capital markets legislation, which, to be blunt, was not written very well. And one big issue is that if there were ever bylaws that wanted to be added to it, you would need parliamentary approval. So it was basically a piece of legislation that would never function as it was initially intended to. What we've been told is that there's new capital markets legislation, which effectively takes the best bits of this former piece of legislation, which is sitting in Parliament and which is being scrapped. And Franklin Templeton, the government, the regulator, foreign groups such as Franklin Templeton, but also Bank of New York Mellon, Jefferies, and other groups have been involved in saying, here's what is needed to be in this legislation to make a functional capital markets. Now, some of the bigger things are introducing fungibility, which means if you have a dual listing, you'll be able to, let's say, for example, if the shares in Uzbekistan are trading at a discount, you'll be able to move them to London and close the arbitrage in price. Make it easier for international custodians to come here. Effectively, there's a sandbox legislation, which was carved out to make it so you could start to get international custodians here, such as Bank of Georgia. This is going to become mainstream legislation. Further, brokers will be able to have segregated accounts, which means some of the bigger institutional brokerages, say from the US, will be able to open a single account here and then offer segregated accounts for foreigners, so they don't all have to open up individual accounts, which is a bit bureaucratic. So all of this, we're told, is supposed to be passed in December. It's going to be lumped in with the last session of Parliament, where they pass the budget for 2026. Again, it's Uzbekistan. If it gets passed in the first quarter, we'd be over the hill. So, but nonetheless, this legislation is done. It's now a matter of discussing with members of Parliament and educating them on this and getting it included in the final session of Parliament for this year. If that happens, it would be an absolute game changer, because that then paves the way for Uznif to IPO in the first quarter, probably the middle of the first quarter, where again, we expect this to be oversubscribed. And with this legislation and foreign custodians coming to the markets, we're aware of several dozen foreign institutional investors that already have brokerage accounts here, and many more that would like to come here if the segregated accounts issue is resolved, which means that we would expect this issue, Uznif, to be oversubscribed in London and here. Now, where that gets really exciting is we've always talked about, you have the local market, you have companies growing very quick that are ridiculously cheap, but they need to re-rate. And we're already starting to see foreign institutional capital come into the market, open brokerage accounts, and they're buying, lo and behold, the de facto blue chips, which we have core concentration in. So we're seeing, again, as I mentioned, the performance of the strategy is up 5.8% month to date. So we'll see what happens tomorrow. But it's already beginning, and we've already been approached by several other investors in the market that would like to buy our entire stakes in a handful of companies, simply because it's too difficult to get their hands on shares, which means our strategy from the beginning proved right. It took a few years, but it's beginning to happen. So this is very, very exciting, and the next few months will be very telling for the future of Uzbekistan's capital markets. But again, this is what we've been waiting for, and performance is beginning to show it. And again, it is foreign capital comes into the local market, it's going to spill over presumably into our names. We assume then that you see a successful Uznif IPO, and then you get the locals involved. You get a much more robust corporate bond market, and then in time, we start to see private sector IPOs. So again, the pieces of the puzzle from when Thomas and I came here in 2018 look to be falling into place rather quickly over the past few weeks. So with that, I'll pass it off to Vicente and Nguyen, who will discuss Vietnam.
Thank you very much. So first, I would like to announce you a very great news about Vietnam. That's FTSE, or already official upgrade Vietnam to emerging markets status from frontier market status. So this is, we can say this is a turning point of the Vietnamese stock market. So for more than 24 years since 2001, so finally Vietnam become one of even the small emerging market. So it's a really impressive milestone for the country. So according to many international funds and big market player, they estimated a passive inflow is expected around 6 to 7 billions after 21st September 2026. Why it take another 1 year? Because FTS is after reclassification. It will take roughly around 12 months for the assessments, and after that, the markets will officially is in the baskets. So thank you. Let's go to the next. Next slide, please. Yes. And another thing I would like to announce you that Vietnam has very impressive economist performance. So in the third quarter, the GDP growth of Vietnam hit 8.23% to become one of the fastest growing country in over the world, and to bring 9 months of the year to 7.85%. So the target of 8% in 2025 is really in hand. And Vietnamese government even raised up its target for 2026. So the GDP growth target at 10% indeed. Absolutely, many investors, many economists or strategists can think that this is very ambitious target. However, as a Vietnamese citizen, I think this is really possible because the government is doing the right thing on the right way. So everything can achieve. So actually, the economic growth is really supported by the fundamental factors from FDI, from exports, from consumptions, and even industry, and even public investment sector, because Vietnam spent a lot of money to invest into the infrastructure. So this will have the economy to grow in a very long term. So go to the next, please. So one of the key factors that a lot of investors worry about roughly 6 months ago in April, that is the export of Vietnam. Because President Trump in April announced 46% tariff for Vietnamese product at a time, the market tumbled. And a lot of investors, a lot of analysts already worried that, okay, Vietnam will face a lot of difficulties in this year and the next few years, and it will drive the economy's growth down. But actually, it didn't happen like that. So according to the statistic number, the export to US reached on-time high regardless of the tariff. In the first 9 months of this year, the total export revenue to US reached $112 billion, increased 27%. Yes, increased 20%. It's much higher than the average growth of the whole of the on markets, roughly around 18%. And according to the Global Trade Alert, they analyze and they point out that Vietnam really gains competitive advantage against other countries such as China, India, or ASEAN. So in this chart, you can see that Vietnam is in the top 3 beneficiary. So we gain quite a lot competitive advantage. So a reason why we do not worry at all about the exports future and the outlook of the exports activity of Vietnam, even though it's increasing stronger than before. Why? Let's go to the next, please. Because as you know that the US put a tariff on China roughly 50% and India of 50%. So because of this kind of high tariffs, so we see a really strong production squeeze from China to Vietnam. So in the first 9 months, the FDI increased sharply, and FDI disbursement in the first 9 months reached the record high in the history. So within this year, the total FDI disbursement is estimated around 27 billion US dollar, and particular 50% come from China and Singapore. Yeah, Singapore is just like maybe a special vehicle country. So where China invests to Vietnam through Singapore. But by this way, you can see that, yes, the tariff also hurt Vietnam with 20%, but other country also 19%, most likely 19 or 20% for Asian country, and 50% for China, 50% for India. So this is really enhanced Vietnam, help Vietnam to get opportunity, and we become, how to say, a hub. So a lot of country move a lot of enterprise move their production and factory to Vietnam to produce in Vietnam and then export to US and all over the world. So this is a really, how to say, big competitive advantage of the country. Go to the next, please. So with the economy, with the upgrading from frontier market to EM markets, with the strong economic growth, so on this thing, Vietnam stock market really hit the all-time high at 1794 points in October. Before it's right now is correcting a little bit, but however, it's already surpassed the very psychology level 1500, and right now it's increased to the next level. So this is very important because Vietnam already surpassed its how to say psychological level. So I think it's continue to increase because the strong economic growth and very strong earning growth of the listed enterprise. Go to next. So a lot of people think that, okay, after VN Index increased softly like this, so is it expensive right now? Actually, it's not. Because in the first 9 months, in the first 10 months, almost 10 months, VN Index increased nearly 400 points year to date, roughly 40%. However, you know, the top 5 largest stock with the 5 largest weightings in the baskets already contributed more than 66%, most of the stock unchanged. So the reason why the valuation, the whole index is roughly 15 times, but you know, without this top 5, the valuation of index is roughly only 13 times. So it's still very undervalued compared with the very strong growth of Vietnam. And a lot of stock is right now is traded roughly around 10 times, very, very, very undervalued. So for example, our portfolio, go to the next, please. So we sadly that we underperformed the index in the first 9 months because we do not have Wind Group or Wind Group families or some big bank in the portfolios. However, we see is a huge opportunity for investor to from now on, because the tariff dampens our export stock that we have roughly more than 15% export stock in our portfolio. Even though those company earnings hit the record high, we just make a visit to our top 3 export company in the portfolio, and we met the 3 CEO. They are completely confident that they will make the record highs earning in the history in this year, and next year they will increase roughly around 20 to 30% indeed. And because of the stock price getting down and their earnings getting up, so the PE of those exports company roughly around below 10, around 6 or 7 times only. According to our estimation, the PE of our top position is around 7 times on earning only. So sooner or later, the investor will how to say, notice that, yeah, this is completely undervalued. It's nonsense to ignore those kind of stuff, and when the investor will come back, the capital come back, the performance will be much, much better. So if you look at the top 10 position of the our portfolio, we can see that, yeah, most of them are below 10, only 3 position roughly around 10 times only. For example, FPT is a technology company with a high growth. Company is the largest technology company in Vietnam. So with the PE 10.5 is completely undervalued compared to the global peers indeed. So thank you very much for listening.
Thanks everybody for your, as always, very interesting and insightful presentation. We will now answer some of the many questions we have already received from the participants, but you can still submit more questions during this Q&A session through the Q&A button at the bottom of the Zoom screen. Unfortunately, today it's only about 15-20 minutes. Normally it's 30 minutes, but let's start with it. So the first question is for Scott. Uzbekistan's currency, the SUM, has lost more than 79% of its value since 2009. However, since January 2025, it has appreciated by around 7.8% against the US dollar. What are the medium to long-term prospects for the currency?
Thank you. So, firstly, to address the historical depreciation of the currency, this is because you had a huge current account deficit in a black market with a pegged exchange rate. So in 2017, I believe, they floated the currency so it adjusted to the black market rate of 8,100, and then it raised up to about 9,000, 9,500, and then it's depreciated 5 to 7% per year, whether it was COVID, whether it was the conflict in Ukraine. But it was mentioned this year it's up. So I've always imagined that if this country wants to maintain its manufacturing base, it needs to remain competitive with the ruble and the Kazakh tenge. But nonetheless, if you look at sort of the shift in policy and the fact that they have a lot of gold, I estimate this country has roughly 500 million ounces of gold in the ground. So they're mining roughly 4+ million ounces a year, and that has historically helped to cover the current account deficit. But what you're now seeing is there's a huge amount of Uzbeks that are going abroad, and historically it was predominantly Russia. Russia is still there, but if you go anywhere in Europe, you're seeing taxi drivers, construction workers, they're Uzbeks. You go to the Middle East, Saudi, the UAE, Israel, you go to Japan, there's a huge push to send workers abroad, skilled workers in many cases, not just housekeepers. So they're estimated to send back roughly $20 billion this year. At the same time, gold a few weeks ago hit an all-time high. So the country's foreign exchange reserves keep rising because a little over 50% of them is gold in their vaults, and then they'll sell it when they need to, and they don't hedge. So as gold prices rise and remittances rise and FDI rises, you'll probably see more stability in the currency. Now, what I'm hearing is the central bank is beginning to intervene in the market because the currency is appreciating probably for the first time ever for an extended period of time. But looking at the structure of the market, I think the government actually is probably going to be fighting off an appreciating currency. So if it's going to devalue going forward, I would imagine it's small, low single digits, because the government would like that to be able to remain competitive from an export standpoint. But I think they're, at least in the near term, as in the next few years, with rising gold prices, which I really don't see falling significantly anytime soon. Maybe there's a blip for a handful of months. There's probably a greater risk of broad currency stability and appreciation, which is a sea change from historically a perpetually depreciating currency.
Okay, thank you very much for this very interesting answer. And next one is also about currency. Overall, which emerging markets in Asia are the main beneficiaries of a weaker US dollar? Ruchir, do you want to take that one, please?
Yeah, I mean, broadly speaking, a weaker US dollar in general is good for emerging markets as an asset class, right? So that spills on to frontier markets also in our part of the world. So I think in general, if you see a weaker dollar, it'll be good for, I mean, not just for stock market returns and sentiment, but in general for macroeconomic stability also. So central banks can better manage their monetary policy and with respect to inflation, their own currencies, and that leads to macro stability. Because previously, when we've seen a stronger dollar and potentially a hawkish Fed, that's been very negative for our markets. But now we're seeing the opposite. If not a weaker dollar, at least a less hawkish Fed or dovish Fed, which is good for our markets. But even if you leave that aside, in general, many of our countries, like I mentioned in my talk as well, they're having their own they're in the midst of their own positive economic recovery cycle. So whether the dollar gets stronger by a little bit or the Fed doesn't cut by 25 basis points in December, I don't think that really impacts our markets as much compared to what the case would have been maybe 3 years ago. So overall, I'm quite confident on the outlook for our markets, and therefore, I'm as I mentioned in my discussion at the conclusion as well, I'm very bullish on the outlook for Asian frontier markets over the next 3 to 4 years, as across all our markets, not just 1 or 2 markets.
Okay, yeah, great. Today, what a surprise. We have a lot of questions regarding Uzbekistan. So there's another one, but you can ask also questions about the other funds. They're also about other strategies. They're also interesting. So what is the forward P of the Uzbekistan fund for 2027 and 2028? By my rough calculations on publicly available data, the 2028 forward P, or already 2028, is below 2, incredibly cheap. Scott?
I don't know what's being modeled there. The problem with the market is that it's too volatile, and most of these companies are SOEs. So there's no forward guidance given by the companies. We don't project out a forward PE just because of the volatility of the market and really the volatility of earnings, even though they're largely moving up. And again, most of these stocks, in some cases, trade tens of thousands of dollars per day. I mean, in some cases, they trade the occasional $500,000 a day. Some also, in some cases, don't trade during the day. So we don't have the there's not the information available to project out that far. I mean, a year, let alone 2028.
Yes, I mean, what is currently the PE of the strategy is around 3.5, I think. So if you assume 20% earnings growth, so it's 3.1 in 2026, 2.7 in 2027, and so maybe 2.2 conservative with 20% earnings growth will be around 2.2 or something. But I mean, yeah, it doesn't look big jump from, I mean, an actual number, but I mean percentage. Of course, it's huge. Okay, then a question for Ahmed regarding Iraq. The oil market dynamics are mixed. On the one hand, the latest sanctions on Russia are positive for oil prices, but on the other, the IEA has been warning of a glut of oil. How does this affect Iraq?
Thank you for that. And I think it pretty much answers or raises a question that many people who look at Iraq look at that. They look at purely oil prices, as I said earlier. And yes, the benefits from the current action on Russian oil are temporary, but given the nature of and the steep discounts of these things, the effect would be sort of probably minor. I read somewhere the other day that Iran, with in spite of all the sanctions and in spite of all the new act by the administration, still is pumping record amounts of or exporting record amounts of oil. So yes, I think it definitely reflects that the market is expecting a glut for the next 6 months or thereabouts, with a probable recovery at the thing. I think it does affect Iraq, and that's what I said this year. I look at Iraq's performance more of a correction than anything else. Because yes, it is a negative, it is a tailwind. Unlike the past, well, it was a it was a headwind as opposed to a tailwind that we've enjoyed for the past couple of years. But I think this is really where Iraq begins to begin more attractive is that, currently we are undergoing a correction. I know 12% does not sound like a correction, but it definitely seems if you look at the long-term transformation of the economy. So yes, the oil is reflected, but I think that's pretty much reflected in current prices and reflected also in expectations. So overall, I think it's a negative in the form of a headwind. However, the transformation of the economy, I think, will trump those, using a Trump word in a different way. Thank you.
Okay, good. Thank you, Ahmed. Now, finally, a question also for the Vietnam strategy. Do you think exports to US grew strongly because many enterprises want to avoid tariffs before deadline? Tariffs before the deadline? Yeah.
So actually, many people already mentioned about this, but according to our observations, we see that, okay, the deadline for the tariff in Vietnam is by the end of July. However, after July, we still have very strong growth of the export in August, in November, in September, and after September, in the first half of October, we still see a very strong growth of exports to US. So yes, from April, from the middle of April to end of July, many enterprises try to speed up their exporting to US, so the growth could be higher. During that time, the growth was roughly more than 30%, and after that is reduced a little bit to 20 to 20%, but 20 to 25% is still super high, much higher than the average of the whole country, roughly 18%. So actually, it could impact a little bit. However, the trend is still growing very fast, so we do not worry anything about this.
Okay, thank you. Another question for Scott. Uzbekistan became in summer during the meeting member of the BRIC, a partner in the BRIC BRICS society, or what partnership. What opportunities and changes can this bring to the Uzbek economy and the Uzbekistan zone?
For the Uzbekistan zone, I already mentioned that the currencies experience appreciation from gold and remittances and FDI. So I mean, really, they got invited into BRICS because of the part of the world that they're in. But what's very clear is that Chinese investment into, well, not really investment, but the Chinese involvement in Central Asia has picked up considerably. Whether it's managing projects from an EPC angle, building a handful of factories. I mean, you go around Tashkent, there's hotels, and really there's Chinese restaurants everywhere. I think there's 50, 60 Chinese restaurants. 5 years ago, there were 3. So they're coming also for tourism. So this integration is happening. And also you're seeing, let's call it de facto dumping of excess capacity from Chinese factories into Central Asia, as you're seeing into other Asian frontier markets and into Africa. So you can get a lot of cheap Chinese stuff. But for example, the Uzbek government is sort of fighting back, and Temu, the online platform, they've blocked it here. So this is the main benefit from joining it, is a bit more negotiating power, but equally their US diplomats were here a few days ago, so they're playing Russia off of China, off of the Middle East, off of the US, off of Europe. But in terms of BRICS, if you will, I mean, you're seeing a lot more Chinese involvement in the region and in Uzbekistan.
Okay, thank you. Ruchir, one for you. What are the key risks to your positive outlook for the AFC Asia Frontier strategy?
Yeah, I mean, one can always say the key risks are external and some kind of major negative external event, but obviously that's going to be negative for everyone. So let's not try and predict that. But in general, I think our markets are in a pretty, like I said, a pretty sweet spot, a pretty stable spot as of now. So I think it's for them to kind of mess up from here. So for example, I think the key risk is not following through on reforms or focusing on policy making, which hurts the macroeconomic stability. something on those lines. But the probability of that happening, I think, is a bit low right now, given many of these countries faced major issues a couple of years ago. So I think we've got a pretty good platform for stability and growth going forward. But I think the key risk is some kind of missteps in policy making and reform, which impacts, economic growth or macro instability and therefore investor confidence. So I think that's the key concern going forward.
Okay, thank you. Vicente, so there's a short question here. Why don't you buy VIC? So for the participants, so VIC is the biggest, what Vicente already mentioned, the biggest index stock, stock in the index. And yeah, it's a top holding company of a big conglomerate in Vietnam.
Yes, actually, VIC is the largest weighted stock in Vietnam with roughly around 10%, including together with its subsidiary like subsidiary like Vinhome, Vinpearland, and Vincom Retail. So total weighting of Vingroup family roughly 70% of the index. However, we didn't invest into VIC at the beginning because in our point of view, wind curve is a very complicated curve indeed, and it's not, how to say, it's not undervalued at all. The valuation of wind curve roughly around 40 or 50 name, but the most important thing when we look at wind curve is that the EV that the company is aggressively investing is the VinFast. So every single year, Vingroup is right now burning $2-3 billion into VinFast, and actually at the moment, as a citizen, as a Vietnamese citizen, I have tried driving a VinFast car, and even I'm not a car expert, but I think the success of VinFast is still, how to say, very far to discuss about. And because of Vingroup is investing aggressively $1 billion into VinFast, so it's the reason why the company didn't pay any dividend, not at all. And another thing, the debt ratio of Vingroup is super high. More than 80% of the total assets is debt. So completely the company is financed by debt. So in my point of view, I think it's risky. So we rather ignore Vingroup than taking risk for the whole portfolio. That's the reason why.
Yeah, and it's also massively supported by the group chairman and the founder of Vingroup, obviously.
Exactly.
Okay, so it's pretty soon 10:15 here in Hong Kong. So one last question, and this goes to Ahmed. What is the role of foreigners in the Iraqi stock market? Are they buying or are they selling?
Well, they're mostly non-existent. I mean, apart from us and one other fund, there've hardly been any new inflows into Iraq, I think, at least for the past couple of years. And this really was surprising in the sense that all of this is domestically driven. We're getting an increased group of domestic investors, which we haven't had in the past, which is quite positive. I think it's extremely positive in that as that grows, given the amount of wealth in the country. But no, foreigners have been mostly absent with sort of small investment here and there, but I think mostly absent. And that tells you something. As the market keeps on doing better, and as I think if I can see the country sort of performing along the path that we see, I think with that, with increased perceptions, any meaningful funds inflow could read in dramatic price performances. But sadly, no, they've been absent. But we're waiting for them.
For us, it's good. This concludes our webinar today, and since we still have some unanswered questions, we will answer them directly by email. And if you have further questions, please send them to us too by email. You can always reach us by email, either Peter or us here of the team. I hope you enjoyed this webinar. We will continue to hold quarterly webinars also in 2026, and we will announce them in our upcoming monthly newsletters. Also look out for the newsletters. And you can also see this webinar on our YouTube channel. You can also subscribe to our YouTube channel, Asia Frontier Capital. Happy Halloween and happy investing, and see you soon. Thank you. Good night.
Thank you all.